Hello again, everyone. I'm Nate Keenan. Welcome to another edition of the Mortgage Podcast. In an attempt to repair the current mortgage crisis, there are proposals being offered in Washington that would radically change the way mortgage companies do business. Congressman Barney Frank, who has built a terrific legacy during his 25 years in Congress, has put together the Mortgage Reform and Anti-Predatory Lending Act to fix the problem. One part of the bill that has already been modified would have required that loans could only be offered if the closing costs were not financed into the loan. That means you would have had to bring cash to your closing to pay all the fees if you refinance a loan with a broker. Luckily, a lot of mortgage brokers are able to get clients lower closing costs since banks pay us a fee called yield spread. However, for some reason, the original version of this bill barred brokers from collecting yield spread too. Ultimately, cooler heads prevailed, and future changes to the current laws will allow us to charge lower closing costs by getting paid by the lender, and you won't have to bring money to the closing to pay your fees. The whole mortgage mess really can't be solved unless it is looked at on a case-by-case basis. As much as Frank might seem to think that mortgage brokers created this crisis, there is blame to spread among all parties. A lot of people bought houses that they couldn't afford, when in reality they should have bought something smaller. I'm in the trenches every day, and I see these credit reports, and frankly, I've seen a number of cases where people bought homes with no money down, and they were late with their payments. Yet they had enough money to pay for a big screen TV, or for a major landscaping project, or some other frivolity, when the money should have gone to a mortgage payment. And since a lot of these people bought houses with no money down, no harm, no foul, they just walked away and lost nothing. In reality, it makes sense to drastically cut programs for people to buy houses with no money down. The major problem here right now is the foreclosure situation. Once you are 120 days late, the process starts. Maybe Congress should take a closer look at that policy. The borrowers sign contracts allowing banks to take the house if they are that late, but foreclosed homes are an albatross to a lender, and banks want to avoid foreclosing at all costs. Maybe a foreclosure restructuring program would be in order here, where banks would hire credit counselors to arrange payment arrangements with individual borrowers so they can keep their homes. The proposal to fix adjustable rates for subprime borrowers is not a solution here, and it's incredibly insulting to subprime borrowers who opted for a higher fixed rate when they could have had a lower adjustable. Now, the people who have maintained timely payments on their fixed loans, it's just not fair to them to see that the people with the arms at lower rates with late payments are allowed to just keep their lower rate on a fixed loan. That's an incredible slap in the face to a subprime fixed borrower who has been paying on time. I find it odd that mortgage brokers almost ended up out of work if Frank's original bill had gone through unchanged. Let's say a restaurateur has a 4-star establishment that is rather pricey. A customer comes in, orders a nice dinner, and when the check comes, he says he can't pay his check because he can't afford it. You would think that this customer should have gone to a less expensive restaurant that he could afford. Well, let's say that this situation became very commonplace. Assuming the prices are clearly disclosed on the menu, would Congressman Frank want to propose legislation that would create federal regulations for how the 4-star restaurant makes its money? It's good that our elected leaders are trying to solve this problem, but the reality is, unless you look at the mortgage situation on a case-by-case basis, there probably is no simple solution to this very troubling problem. And luckily, this bill has been modified to keep even more problems from being created. For more information about your mortgage, feel free to give me a call toll-free at 1-800-991-9575. That's toll-free, 1-800-991-9575. I'm extension 202. For the Mortgage Podcast, this is Nate Keen.